Hello again, traders, and welcome out to another market roundup. This is Sanket here, and let's begin a market coverage. It's a Tuesday, August the 22nd. We are in this peak summer trading environment, the last stretch, a couple more weeks. But I must say, the equity markets and the bond markets have been moving quite a bit. So let's get into today's market price action. We'll be going over what happened in the markets, looking at broader market analysis, taking a look at our currency baskets, and talk about our potential setups in the next 24 hours. So let's get on to it.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the Apply button in the video description. Let's break down what happened today.
So looking at the performance today, first thing first, the equities remains weak. So every rally is getting sold. And remember, this is the opposite of what we have seen in the markets in the last 2 to 3 months. So we are a bit fragile in the markets, and we'll take a look at the charts, but market looks weak here. Now, looking at the performance in the currency market, it was a mixed bag. And one of the things we noticed today, the outperformers underperformed today. The European currencies, euro, Swiss franc, and pound, has done really well, but they are actually weak in the last 24 hours. So a bit of a pullback across the board. Now, looking at the things that were weak, actually had a bounce. So Aussie and Kiwi had a small little bounce onto the upside. The dollar was mostly flat, but if you take a look at intraday price action in the dollar, there was a lot of back and forth. And it's just because we're seeing a lot of back and forth in the bond market, and the dollar is really tied up to what the bond market is doing right now. The yen actually did well today, and again, overall, the yen is not really falling apart, and this is the environment where yen can gain more than it can lose when there's a strong risk-off environment. So a day like today, we can't really take much from it. It was the opposite of the trends that we are seeing, and we can just use that day as we call it a bounce day. Now, looking at the broader tape here, crypto had a worse day, down 2.46%. Outside of that, you can see small numbers. S&P down 0.28, World Stock Index down 0.24, bond market slightly down. And when we take a look at the intraday price action, you will see where there was a lot of back and forth, but at the end of the day, it just didn't have much of a change for the day, a lot of intraday movements. On the other hand, gold, which is sensitive to the bond yields, has also been fluctuating quite a bit, so only up 0.17%, and oil is down 0.56%. So small percentage moves as we look at towards the end of the day, but a lot of movements during the day. So that's really we need to pay attention to is the intraday movement here. So overall, let's go into our market analysis and looking at our outlook. And our outlook here is a -2. We are below the 20, below the 50. This is again a bearish movement here. Now let's take a look at the chart. What we are noticing in the chart, we are noticing a bear rally. Remember, this is a strong level of prior support is now the resistance. So we are still below that level. Look at the 20 and the 50-day moving average. They're slowly converging. And as soon as we see the 20-day moving average cross over the 50-day moving average, I think there's more pain ahead in the markets here. So it's definitely important to be on the cautious here, be on the guard, because markets are changing. And this week, we'll find out more as we look at the schedule. Starting tomorrow, we have the European PMI numbers. So these numbers, again, we'll see how the European currencies go from it. But right now, we are seeing a lot of weakness. China showing weakness. US number has been much better, but this will be important. Especially all these European currencies has been doing really well. And this is the time where we need to see if the number supports it. Now, Friday is really the big day as we get the Fed Chair Powell from the Jackson Hole Symposium. And that's really what everyone is focusing on. What the central bank's going to say, where the movement's going to be. So you really have to be ready to play the movements on either side. But going into it, we're seeing a lot of volatility. So again, unusual environment, summer trading, but we're definitely getting a lot of back and forth. So you have to be really careful about this market environment and how to trade it, and using the right time frame as things can shift from a day-to-day basis. So let's do our currency analysis and take a look at our velocity score. And right now you can see a lot of things are in a -1 to a +1. Again, we'd like to see things in a +2 and a +3 range. that's where we get big movements. Today, euro was the only one that was in the -2 range. So if you pair euro against the Aussie and the Kiwi, they were decent trades. But remember, euro has been trending to the upside and Kiwi and Aussie trending to the downside. So a day like today, you either play a bounce or you stay out because we're getting a bounce in the market. So overall, trends haven't changed. We're just getting a bit of a relief rally in some of the currencies. So that's really where we are at. Let's take a look at the possible trades ahead and talk about if we can find a good setup. And right now, it's...
Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application. Then you'll watch the full-length recruiting video and then schedule an interview with one of our traders. Are you our next trader?
It's just not all about setup, but also finding out where is the movement happening. So let's just jump into the dollar chart here. I want to show that how dollar, look at this this is the daily chart. Dollar is consolidating, but remember, dollar is not falling. This is a strong sign. After this massive rally, the dollar is holding. So I think right now you don't want to be catching a counter trend trade here, but really take a look at it and see if there is a broader or bigger breakout coming ahead. But if you look at this chart on a 4-hour, there's a lot of indecision here. We are still strong. We are above the 20 to 50. What does that mean? Buying on the dips has been a good little strategy here. Notice that every time we sell off, right here, and right here, there was no follow through. So this is again telling you, be the buyer on this pullbacks here. Now take a look at the bond markets. Now, this is where there's a lot of action. Again, ahead of this Fed chair speech on Friday. Now the bond yields. Let's take a look at the bond yield basket here. Notice that on an hourly chart here, there's a lot of back and forth, but overall, you can see the yields has been rising, and this has been a bit of a worry signs for the broader markets. This is the prior high. We have clearly broken above the prior high and still staying above it. So if you look at a 4-hour chart, 12-hour chart, and hourly chart, all time frames will say the yields are going higher. And if the yields get going higher, that is going to put pressure on the broader markets and is going to help elevate the dollar, and it is a little bit bearish for the gold. Look at what the gold has been doing for the last couple of weeks. It's been slowly trending lower. So you really have to look at these broader theme here so you can really pick those currencies accordingly. The growth currencies have been hurting because everything else that would support a bullish scenario for Aussie has turned to the downside. So Aussie looks bearish, Kiwi looks bearish, and in the shorter term, like I said, is getting a bit of a bounce. But again, that's what we expect. Things are looking really oversold. If you take a look at the RSI, we can really find out that we are sort of trending lower, but we are in this oversold territory here. So you can look at that. The RSI on a daily chart on Kiwi is to the downside. Look at the exponential moving average, it's sliding lower. So this is just a short-term bounce. I would love to see sort of have a bit of a rally to short into. Same scenario goes with the Aussie. These rallies, we want to use that as a shorting opportunity. I do like Aussie and Kiwi both to the downside. Now the big question is that what we pair with. Lately, outside of the dollar, Swiss franc, euro, and pound, they've done really well. So you can see that in a day like today, it's just a shorter term pullback. It's not a trend changing move. But tomorrow, when we get the PMI, keep an eye on the euro and the Swiss franc, because these two currencies, look, they're very elevated here. They could sort of rally on that news or sort of pull back on the news. I think we can trade that as a news event. But right now, I think the better price action is still to the upside. That's what the trend is. But for a news event, you have to be prepared for both case scenario. So dollar is showing a decision here. Let's take a look at the yen. So you can see that yen on a daily chart looks kind of sideways to me here. It's not rallying, but it's not falling apart. So you got to realize that in these kind of environments, you probably want to be long the yen instead of short the yen. If you're getting a short-term rally, ride that momentum. But I think you just have to be really careful with these environment as markets can really break lower. Remember that equity markets, let's take a look at the SPX, has been sitting on some really good gains overall. But you can see that markets are changing very quickly. Now, with this sort of change in price action, we want to be adjusting to it. We'll be looking at more risk-off environment than the risk-on environment and pick those currencies accordingly. As far as the setup goes, the first one that really caught my eye today was the euro dollar. Remember, the euro currencies has held in really well. And take a look at that 4-hour chart. We got a nice little break back to the support. Let's go look at the daily chart. Daily chart is right at the support area as well. So if it gives up the support area, the next level support is at 106.50. And we can see this accelerate, especially with the PMI figures tonight. So again, on a weak PMI numbers, I want to be short the euro. If the PMI numbers comes out better, then I guess we can jump back into those other currencies like Euro Aussie or Euro Kiwi. The question is this ready to pull back, or can we see a sort of a further pullback towards this prior breakout area and then get long? So right now we are in this pullback formation. We could extend a little bit to the downside, but remember, it's all about your timeline on the trades. Things are looking good. You just have to make sure you're trading the right time frame and holding it for the right time frame. Next 24 to 48 hours can be tricky, especially everyone is waiting for this Jackson Hole Symposium and what the Powell's going to say. Meanwhile, trade was in front of you. Right now, we're getting a lot of back and forth, but I realize that it's better to trade where the trend is. And if the move is happening opposite of the trend, that's the time to sit out. That's all I have for now. Thanks for joining, and we'll see you guys in the next update. Cheers.